Can we talk about Supermicro Computer Inc. for a couple of minutes? If we go to the monthly chart, we can see that stock is up over 200% prior to earnings anyway for the year. And in the month of July, it was up over 30%. As last month, they announced that they were going to raise their quarterly sales guidance by 20% and earnings forecast as well due to high profile partners like NVIDIA and AMD. With that news, it was now trading at a PE of roughly 30. So price was priced for perfection. And so what happened during earnings? Well, the price sold off. Let's get into the news. This article is coming from Investors Business Daily. Supermicro Computer revenue outlook disappoints amid AI buzz. Shares of Supermicro Computer plunged Wednesday as its fiscal 2024 outlook for SMCI stock disappointed some analysts amid buzz over AI stocks. The company, however, reported fourth quarter earnings and revenue that topped estimates. So even though they topped estimates and their forward guidance of 10 billion, which was 1% above estimates of 9.88 billion, it wasn't enough. Again, the stock was priced for perfection. Now, if you don't know, Supermicro makes computer servers, custom motherboards, networking gear, data storage systems, and power supplies used in internet data centers. Again, that theme, data centers. This is why NVIDIA is up so much. Additionally, AI software processed in internet data centers is driving demand for high performance computers and networking gear. Also, Supermicro has been collaborating with leading AI processor makers like NVIDIA and AMD on their server and storage systems. Now here's what the CEO had to say. Supermicro continues to see record levels of engagement in our new generation product lines, especially for AI applications. We secured several new and large design wins and are deploying some of the world's most leading GPU clusters. With the recent new key component supply chain challenges, mostly in the rear view mirror and production normalizing, we expect to gain share and expanded share scale. Now, from a different viewpoint of the earnings, let's look at this video. It's coming from TD Ameritrade Network.
It's time for a look at a developing story with Kevin Green, senior markets correspondent for the network. So, Kevin, today we are looking at, honestly, this is my first time looking at this stock, but it's a good move, or I guess not so good move today, but warrants a discussion. It is Supermicro Computer. It's SMCI ticker, down over 21% today. What's driving the selling?
Yeah, well, we did actually see an earnings announcement from them where they beat both on the top and bottom line, but their guidance was well short of the street's expectations here. Now, this company really does focus on manufacturing computer servers, networking equipment, custom motherboards, and things of that nature, which is going to be in high demand because of this new AI craze that's going on in the marketplace here. And the market was really anticipating a pretty significant surge and ramp up here in the near term when it came to top line growth, and that just was not the case. We did see revenue coming in at $2.18 billion versus the street's estimate at $2.17 billion. The adjusted earnings per share also came in at $3.51, beating the estimate of $3.40 here. But once again, we did see a little bit of a contraction in margins. Not surprising. They are going to spend a little bit more to be able to ramp up and meet demand. But we also did see that their outlook or their expectations for Q1 came well below the street's expectations here. Revenue forecast for Q1, they are looking at revenue coming in between 1.9 billion to 2.2 billion. The street was looking for 2.2 billion, and the adjusted earnings per share estimate right now is between $2.75 to $3.50. Street was looking for the midpoint to come in at around $3.21 here. So this is actually not surprising when we see this type of trend. In order to be able to meet demand, in order to be able to ramp up, you're going to have to spend money, and being able to actually capitalize on that revenue gain, it's going to take some time. This is the same reason why we saw Microsoft actually drop. Now, obviously, that drop wasn't as dramatic as this one, but that's another reason why we did see a little bit of a sell-off. The street is really expecting AI to be realized as far as revenue and adjusted earnings per share within the next quarter or 2 quarters. And Jenny, it could take 6 months. It could even take a year in order to actually see the full impacts. And unfortunately, companies are going to have to spend money in order to be able to meet the need. And that also is going to not only impact gross margins, but also deplete cash reserves.
So, Kevin, this is such a good point because we discussed AI and we discussed some of the capabilities that still need to roll out, the costs associated with it, the data servers that still need to be built. I mean, all of this various infrastructure that needs to still occur before we can really get excited about AI being totally here, right? So is this going to be something we hear persistently? You mentioned we heard it basically from Microsoft, but to me, this is an interesting component of the AI craze. We're even seeing NVIDIA shares down, 3.5% today. I mean, is this something that the market just didn't consider when some of these stocks shot up astronomically? Because this stock here, is still up over 200% on the year, even with today's move lower.
Yeah, the market definitely got a little bit ahead of itself here. And actually, if you look at a lot of these big tech companies and these semiconductor companies, NVIDIA is really the only one that moved their guidance as aggressively. And so that also puts a high bar in for them if they're not able to meet those targets, especially in the near term, because of maybe, companies may not spend as much going into it. They're still trying to plan, or we do see any type of supply chain issue when it comes to trying to provide these new chips to the marketplace. That could really impact the market and impact NVIDIA to the downside. So I think a lot of companies are trying to be a little bit cautious when it comes to their guidance. It's better to be able to underpromise and overdeliver. And I think that's kind of the trend that we are seeing in the marketplace right now. Also, just kind of keep in mind, Super Microcomputer also does work with AMD and NVIDIA, but they work more on the server side of the business, which has seen a little bit of a decline here when it comes to enterprise spending. So that also is potentially another reason why we saw the revenue miss compared to what the street's expectations were. I think right now we're just in uncharted territories. Give it a little bit of time, let the infrastructure get in place, and then that's when we're going to be able to see some of this top line growth, as well as it impacting overall earnings on a GAAP and non-GAAP adjusted basis.
All right, so if we go to the monthly chart, we can see a huge rally in price. We had a pause in June and then a rally out. So a leg in, basic candle, leg out. So that becomes the monthly buyer's level. We'll say at 230. Now, if we go to the weekly chart, we can see a similar pattern. We have, this is that basic candle on the monthly chart, but you had a rallying price, a basic candle, and then rally out, taking out that pivot high to the left. So we can say that that is weekly buyers. So this is good. You got a level on top of a level, making this level even stronger, this area, and we'll say that's a 250. All right, so now let's scroll down to the daily chart. Now in the daily chart, we can see that price did gap down on earnings. You see this little rally in price the following day. That was due to this buyer's level at 250. However, still got a lot of selling pressure. So price gaps higher on Friday only to end the day lower. So now I'm looking for more unfilled buy orders. And in this level, there's not a lot of volume here. So personally, I want to see price just trickle down into the level, into the monthly buyers level. I want to see the weekly buyers zone be breached, and I want to see price slow its downward momentum into that monthly buyers level, and then kind of hover for a couple of days, move higher, pull back, and higher. So here's what I'm looking at. you know. And then I want to see something on high volume. Then I want to see a test of that apex. This is the ugly looking W pattern. And then I want to see prices move higher. So that's what I would be looking at if you want to get long Super Microcomputer and you didn't get a chance to. I love the zone on top of a zone, weekly buyers on top of monthly buyers. I'm anticipating this area to hold. However, I do anticipate maybe a bit more downside weakness before price bottoms and bases. And then I'm looking for some type of catalyst on high volumes to shoot higher, retest. That would be an opportunity to buy and to go long. Thanks for watching. Subscribe. Please like the video.